What is going on, everybody? Welcome to the video. Welcome to 2024. Hopefully you all have had a great year so far. It can't be that bad, it's new. From this video, we are going to show you 3 option strategies for consistent income, and I'm going to show you exactly how to enter them and how they work. So with that being said, let's go ahead, cue the intro, and jump right into this video.
I know I'm fine, but the money makes me...
As you guys all know, I love the S&P 500, and this is where I start. Now, for one of the strategies, we are going to switch to a different stock, but I feel like everybody uses the spiders or the Qs, which is another one that you can use here. We'll go to it. It's a little bit cheaper. So, but first thing, you guys see the title, we're going to work on options. I want to start with the cheapest option strategy possible. Like, you can start with $100. That's how cheap this strategy is. First thing we're going to do is we're going to pull up a chart so we can see both. I'm a very visual person. I want to see the actual chart and see my price ranges when I'm looking at these and what I'm wanting to do with these strategies. So the first thing we are going to do is going to be a call credit spread. Now, what does that mean? We are going to do a credit spread on calls. And now this is a bearish strategy, but I'm going to show you how you don't have to be right to still make money. And I think that's a key thing that people don't really look at. So the first thing you're going to do is hit the options button. And so then you're going to choose a date. Now you can do this. A lot of people will go 7 days out. I know 0 DTEs are very, very popular nowadays. I don't ever touch a 0 DTE. That's just me. I'm more of a passive investor rather than trying to do this every single day and have a lot of risk. 0 DTE does have a lot of risk that people don't tell you about. But for this one, you are either going to go 7 days out or you can go a little bit further out. It's whatever's optimal for you. Me, I like about that 40 days out. Now, what I'm going to do though with these calls, and I think a key point to remember on this strategy, if we come back to the chart, is on this one we are going to be entering on green days. You want the market to be green to enter this one. So because, and I'm going to show you why you need that to happen. So the first thing we're going to do is we're going to click sell on here. That's a very important part. Now you want us to keep it on a call. Now we are betting that the market is going to go up more than likely, or stay the same, or go down. But how far up is always the key thing. Now I have a chance of profit thing right here, you all can see, and this is really just going to tell you what the delta is overall. But we want to go up here and we want a 426. So I think this is pretty reasonable. And why I say that is we're going to get this little line tool out here. 426 is up there, guys. This is, I'm going to have to adjust this. 420, good enough. 426. That's how far the market has to move in order for us to lose money. So what we're going to do is we are going to sell this, and you see the price instantly unlimited. I know we're going to minimize that instantly. So the first thing we're going to do is going to go back and we're going to buy an option. Now you guys are instantly like, what do you mean buy an option? Well, here's your thing. You can make $15 for those 39 days up here, and your max loss could be $75. That's a great deal if you ask me. As long as the stock stays underneath 426 for the next 39 days, you make all $15. That is a call credit spread. Now the put credit spread is the second one, and it's more of my favorite because you can do different strategies with it and adjust a little bit different in my opinion. So what are we going to do? We're going to go to a put. Now there's some other strategies that I'm sure you guys have seen out there with this one. I do really like this one. You can get a little bit further out too normally. So I'm going to come down here to this 80. I'm going to collect $300. Now this one's going to show you a different max loss. I think that's very important to know. But we don't want to risk $39,000 either for this. So again, and now this is going to be a put credit spread. We are just going to go over here and we are going to buy. Now look at that. Now you're only going to get $3, but for $84. And then you can air this out. Now an important part of this strategy is to enter on red days. You want to be entering this strategy when you are looking at a red day here. Now, let's see, because this was a 393. That's an important part here. We're going to drag this down here. 393. Close enough for me. And reset price scale. And you're going to see this has to drop that much. Basically, the whole month's worth here, December, worth back down. Is what you're going to see. It's actually a little bit less. A couple weeks. We had a nice little bull run there. But that's what you're looking at for the Qs. So, and this is how you minimize the risk. Now, again, you can play with this, figure out how much you want to lose. You can collect $141 for only risking $1,200. Figure out where exactly your sweet spot is with this, how much you want to risk, how much you want to reward, and do that math for yourself. I think that's a very important thing. All you're doing is widening this spread. It's a great strategy for new accounts to be able to trade great companies and great ETFs like the Qs, the SPYs, and other ones that you can get into and play with them and have a high probability of success without risking all the extra. I think that's a big factor that nobody else. Now the last one is going to cost you a little bit more. I'm not gonna lie to you guys. So on this one, I'm gonna show you why it's my absolute favorite one. So if I go to buy, I need to go back to sell, and I'm gonna go to a completely different stock. So because a lot of people aren't gonna like that one, and the one that I've used a lot because I do like some leverage is TQQQQ or TQQQ. That's mine. It's $50. So worst case scenario is I'm gonna lose $5,000 if I buy the stock. Well, I don't really want to buy the stock, but I love to sell the puts on here. And what I will do is I'm not going 4 days out. I'm going back out to my 39 days. And I'm going to go about to that 75 is where I really like it on these. But you see this is at a 10. I will buy it up here. Probably about a 42. 42 seems pretty reasonable to me. 42, 43 in here. For this purposes, we'll do the 43 because I feel just a little bit safer with this one. And again, we will adjust this so you guys can all see where I'm looking at on it. So a 43 is right there. That's a much bigger drop that you have to have in order to lose money on this. So as long as the stock stays above this, we are going to make money. And this is where it becomes important, because when you look at this, the way this is scaled, now you are risking this much to get $82. But again, what I like to do is, even if I'm going to use the wheel strategy where I'm going to sell naked, let them get assigned to me because I want to own the stock. Because guys, this is how you can buy stocks cheaper and get paid while doing it, is this exact strategy. But what I do is I throw an extra curveball in here, and I'm going to go here, and I'm going to go buy basically the furthest one out I can do. So now my max loss is $1,225. But what I'm going to do is, if this one does want to come and just start flying downwards towards me, this bottom put that I bought will become more valuable. And what I will do is I will just sell it for a profit, and then I will keep this one even if it's at a loss, because the stock came down to that $43. I will continue to collect all $82 of it, and then I will just buy the shares of it at $4,300. I think that is the most consistent strategy that I have used and profited off of very, very well. I've also used these down here. If they go to zero, I use them on my taxes as well. It's another. I'm not a tax person whatsoever, but it is just something to show that you are losing on those trades, and it shows as a loss on your taxes. It's just another thing that you can add to the book that helps with this strategy. But this is basically, you are going to run the wheel strategy. If you don't know what the wheel strategy is, I have a ton of videos. I will tag it up here in the corner or something on this video. Check out my videos on the wheel strategy. It is an insanely profitable strategy if you know how to use it, know how to manage the risk, and know what my rules are for this. So with that being said, guys, thank you guys all for watching, and I can't wait to see you guys in the next video.